worse, with a large US bank likely to collapse in the next few months, a former IMF chief economist has warned. Kenneth Rogoff's comments came as shares in Fannie Mae and Freddie Mac sank on a report that home lenders would, in effect, be nationalized. Despite hopes that the US economy had turned the corner, Mr. Rogoff claimed it was still not out of the woods. "I would go even further to say, the worst is yet to come," he said. "We are not just going to see mid-sized banks go under in the next few months," said Mr. Rogoff, who held the IMF role between 2001 and 2004. "We are going to see a whopper. We're going to see a big one of the big investment banks or big banks." Speaking at a conference in Singapore, Mr. Rogoff, now an economics professor at Harvard, forecast that Fannie Mae and Freddie Mac would probably not exist in their present form in a few years. "We have to see more consolidation in the financial sector before this is over." On Monday, shares in Fannie Mae fell more than 22%, or $1.76, to close at $6.15. Shares in Freddie Mac fell almost 25%, or $1.46 to $4.39. The number of homes and apartments being built in the US sank in July to lowest levels in more than 17 years, government figures show. Builders started to work on 965,000 properties on an annualized basis, from 1.08 million in June, the Commerce Department said. However, this was not as bleak as some had been expecting. Separately, inflationary pressures saw US wholesale prices shoot ahead by 1.2% in July. Core inflation, which strips out energy and food costs, climbed by 0.7% from June. Economists had forecast that this would rise by only 0.2%. AIG Group has announced that more than $5 billion in losses. Its stock lost almost 20%, which is the highest loss in 17 years. Analysts speculate that the group may split and sell some parts, or it may choose to divest assets in one of the regions. In Poland, it owns Amplico AIG Life, which is worth more than 8 billion Polish zloty. The AIG Polska Bank, which is worth more than 5.5 billion Polish zloty. However, experts point out that the value of AIG assets is too low to make any difference for the insurance giant. Cologne Re, the German reinsurer, was burdened by around 30 million euros in the first half of 2008 owing to Storm Emma and local hailstorms. The actuarial report for the group's accident and damage division showed a profit of 5.7 million euros. Group post-tax profit rose by 26.7% to 554 million euros for the period under review, while gross premium income fell from around 1.6 billion euros to approximately 1.5 billion euros in a year-on-year comparison. Accident and damage saw gross premium income down 6.3% to around 595 million euros, while the life and health division showed an increase. Similar development is expected for the year as a whole. CNA Insurance Companies announced that a catastrophe operations center within its Nashville, Tennessee office is fully operational in preparation for handling anticipated claims from Tropical Storm Faye, which is currently moving across Florida. All Tropical Storm Faye losses should be reported through Innovation First Notice, or IFN. Once the losses have been reported to Innovation First Notice, CNA's professional claim staff will be on hand in the Nashville Catastrophe Operations Center to assist with policyholders' daily needs. For additional information, please visit CNA at www.cna.com. Insure & Go has called on insurance providers to follow its lead and remove their exclusions to ensure customers are covered if they're caught up in a terrorist incident abroad. Analysts of the U.S. National Counterterrorism Center figures by Insure & Go show that the number of terrorist incidents around the world, excluding Iraq, has increased by 7% since 2006, from 7,722 that year to 8,299 in 2007. Despite the increased risk of terrorism, most travel insurance companies' policies contain exclusions for any claims made following terrorist attacks overseas, the travel insurance provider added. Perry Wilson from Insure and Go said, "As these figures show, terrorism is an unfortunate fact of the modern world, and insurance providers have a responsibility to their customers to offer a suitable range of policies to reflect this." Liberty Mutual Holding Company and several of its subsidiaries filed a lawsuit in a New York federal court last week, challenging some amendments made to the New York's workers' compensation law. According to the suit, the amendments impair the insurer and its subsidiaries' property, contractual and procedural rights. The changes will require that insurers make lump sum deposits to the aggregate trust fund to cover types of permanent partial disability benefits. This condition only applies to insurers, not employers who self-insure or the NYSIF, which Liberty Mutual contends violates the Equal Protection Clause of the 14th Amendment. They added that this amendment also creates a significant cost advantage for the NYSIF, a competitor of Liberty Mutual. Also an issue is the amendment that follows the aggregate trust fund to enter settlements, which claimants in regard to claims against insurers without insurer consent. Liberty Mutual contends that this violates the Due Process Clause. Finally, Liberty Mutual said the lump sum deposit obligation, which according to the suit applies retroactively to claims arising from workers' compensation insurance policies issued before 2007 amendments, violates the Contract Clause of Article 1 of the Constitution, the Takings Clause of the 5th Amendment as made applicable to New York by the 14th Amendment, and the Due Process Doctrine. And in our final story today, Bermuda-based Flagstone Reinsurance Holdings Limited announced that it will restructure its global reinsurance operations by merging its two wholly owned subsidiaries, Flagstone Reinsurance Limited of Bermuda and Flagstone Reinsurance Suisse SA, into one operating platform, Flagstone Reinsurance Suisse SA, with its existing Bermuda branch. The change in corporate structure will not result in any change of management or corporate control, nor will there be any changes to the board of directors. The Flagstone Reinsurance platform remains under the ownership and control of Flagstone Reinsurance Holdings Limited, a NYSE listed and SEC regulated company. Flagstone Reinsurance Holdings is a Bermuda company and will remain in Bermuda. Well, that's the news for today. We'll be back again at our normal broadcast time tomorrow. Until then, have a good day and thank you for watching.